Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
Hey guys, welcome back to another live stream. Thank you for being here for what is a very important live stream. Today we get the advanced GDP numbers out of the United States. We also get unemployment claims, both of which are key stats in monitoring the state of the U.S. economy, which is all the talk of the town pretty much all the time when it comes to financial markets. But yeah, today's number is pretty important. We get GDP numbers. We are seeing forecasts for 2% GDP growth quarter over quarter. And what we are looking for here is for that number to be hotter than expected, would probably be strong for the dollar. It arguably would be strong for certain companies' stock, certain companies that are, their earnings could be more positive because of that. Previously, we saw 4.9%. This time we're expecting 2% growth. And that should be interesting. We also have unemployment claims coming out here today. Previously, we had a surprise lower in terms of unemployment claims. That shows strength, of course, in the U.S. jobs market. We're looking for that here today. And we also have core durable goods and durable goods. These could also be pretty impactful numbers. And also at the same time, mixed in here to our stream, we are just going to have a little thing called, an ECB press conference, which that definitely has potential to move markets as well as, it's similar to like the Fed for the US. The ECB sets monetary policy there, and what they have to say is very, very impactful to markets. Hey, I got to show you guys something. This is kind of fun. When we do news drops, I made this layout, and I think it's going to make for way easier. You guys know how I scramble at the time of, let me actually save this. I want to not auto save. I just want to, I don't even know how to save this. How do you save? Where did it go? Regardless. Okay, so what we're looking at here, we can take a look on this one single screen at lots of different markets all at once. TradingView is awesome. And this will be great for when we get into the news. I can just switch over to this view. You guys know, I don't know how I've been doing it this way for so long, but I've been manually like building a view each time or a layout each time. But no more of that. We do have a clean way of doing it now. We've got all of the different markets we may want to watch all on the same screen. We've got a couple currency crosses here. We got euro and pound. We got the dollar index in the bottom left, S&P, NAS, Dow, gold, and oil on the far bottom right. So thought this was kind of fun. I am oil is a trade that I'm in right now, which is going well. So if I switch back over to my main view and take a look at oil here, we can go US oil. I am long oil. This trade so far is going pretty well. Let's see how the trade is going. We're up $220 on this one. Thought process on this was a pretty aggressive entry, if I'm being honest. Although I really wanted to be long oil. I really like the setup for oil right now. And the Edge Finder was giving us a nice read. So let me show you what happened. So yesterday, oil was trading in this range. Talked about it with Frank. He was on the show, and we broke out. And on this intraday candle, as it started pulling back, I went ahead and picked up a long position on oil. Small trade, not a massive risk or anything like that. I put my stop loss below this swing low here on USO. And as this thing has pushed off of that, I'm watching it close. If we do get a continued rally, then my next step will be to lock in some profits on this one and trail stops a little tighter. So I am excited about the way this trade is starting, but we'll watch and see how it plays out. Today's GDP number is very impactful to my oil trade as well as to traders trading gold, etc., etc. Okay, because let me paint a picture for you. Let's go over to gold because I know a lot of you guys are gold bugs. Let's talk gold for a second, okay? GDP and how GDP and you, that's what we'll call this segment of the show. GDP and you, okay? It's kind of a cute name. Why does it matter? Well, GDP numbers are going to move prices in a couple different ways. But if you're a gold trader, pay attention. If GDP is hot, similar to PMI numbers yesterday, right? If the numbers on GDP are strong, what that suggests is that the dollar could strengthen, right? If the U.S. economy is looking good, the U.S. dollar could strengthen. And, that could, of course, be really, really a threat to gold. Why? Because if the dollar strengthens, gold is quoted in dollars. So that means dollar stronger takes less dollars to buy gold. So gold comes down. Now, interestingly enough, from a price action standpoint, you've got a big slide down. Price is retracing now into this area at $2,020 an ounce. From here, if that GDP number comes out, again, if that GDP number comes out strong, it's likely that gold gets pushed lower. Now, if GDP comes out cooler, right? And again, we don't claim to know what is going to happen with the market in terms of economic news. That's not something we try and forecast or predict. But if we see a GDP number that comes out lesser so than expected, if the economy's advanced GDP is not looking so good, right? Well, then all of a sudden, gold could actually pop. Perhaps there's a little bit of concern around the recession talks. If that comes into the picture, and again, this is reaching because this is not really what forecast is for. But if you do get significant cooling in GDP, it is likely to cause gold to pop, right? Weaker. Just remember that generally speaking, what impacts the dollar positively usually will hurt gold, and vice versa. Okay. So GDP number is really, really important. I want to show you guys here is a cool update on the AAII Investor Sentiment Survey. We got the latest data last night. And what we can see here is that sentiment amongst traders is 39.3% bullish. And I'm talking about the stock market, but that carries over to pretty much all markets. How are investors feeling, basically? 39.3% said they feel bullish. 34.6% say neutral, and 26.1% say bearish. Not a huge change from the week before, but noticeably slightly less people feeling bullish than last time and slightly less people feeling bearish than last time. What that leads us to is saying, well, seems like investors are sort of becoming a little bit more cautiously neutral. So we'll watch this stuff, but this is really, really important to keep an eye on that sentiment surveys. We use sentiment a lot on these videos, these trading sessions. It's something I use constantly in my own trading, whether it be the commitment of traders data, retail positioning, put call ratio. We look at lots of this stuff. So it is very, very important to keep a tab on. Again, we've got about 5 minutes, guys. Remember what we are looking for is we are looking for GDP numbers. The advanced GDP. Why is it the most important of the GDP ones? It's the one that looks ahead the most. Like it's the most kind of forward-looking. What are projections for GDP like? Unemployment claims comes out here in just under 5 minutes. This is, of course, pretty intuitive, right? How many people are filing for unemployment? If this number is hotter than expected, it's weak for the dollar. If it's less than expected, it shows the labor market is strong and good for the dollar, right? So keep a tab on that. And again, I mentioned this earlier, and I don't know, for those of you guys who may have missed this, check this out. I'm pretty excited about this. This is my new, when we do the news drops, I've changed this layout to be dedicated for us to watch lots of markets at once. I thought this was really fun. So what are we seeing across the board? Well, we're seeing the S&P 500 and NASDAQ. They took a little bit of a tumble here. There was a bit of a bond auction that went, I guess, poorly for stock investors. Yields ticked higher, which creeped out the stock market just a little bit. We also had really pretty not great report from Tesla yesterday. Tesla earnings came out. They disappointed both on the top line and bottom line. What does that matter to you if you're, if you don't trade Tesla or trade stocks? Well, it's an important indicator. Stock earnings are important to of course, there's a lot of weighting of Tesla in the NASDAQ. I think it's like 4% or something like that. But also it tells you a little bit about, the consumer maybe not buying luxury electric vehicles right now. And so that's something to think about. You've got the Dow here trading lower. This one is the laggard of the three big ones. You've also got gold here, pretty range bound, but big drop yesterday off of PMIs. The dollar index holding steady, still finding its bearings. You've got euro. Popped real high up to like 1.0928, then retraced off that. Pound USD, similar story to the euro. And here's that oil trade. We are still in that, letting that one run. And we can go back. Well, how many minutes we got? We got 3 minutes. Let me quickly just recap my oil trade here for you guys. Again, this was a signal sent out to our VIP group. I am long oil. Trade was sent yesterday. I think Frank is also still long oil. In fact, let's go spy really quick. So here is my oil trade. I broke it down. I took a profit on oil previously earlier. That was last week, and then I re-entered this trade here yesterday. Sent out the analysis. Signal to group went there. I think Frank is still in his trade. Oh, he trailed out. So he took profits yesterday for 84 pips. So Frank made some money on the oil move yesterday. I am in the oil move as of yesterday as well. So again, just a heads up, if you guys do want access to the Discord, we do have a free version of the Discord. If you'd like to apply for that, we'll drop the link for that here in the chat. And while that happens, I need to get back over to my full view. I'm excited to try this out. Our all markets view, I think, is quite fun. But yes, you can join the free Discord. You just have to apply for it. We're looking for real people to join our Discord. We don't want bots and fakes. So just apply. Just take 2 seconds to fill out that form, and it will let us know who you are so that we can let you into the group. But yes, you are welcome to join. There is a free version of the Discord available. Okay, so coming in hot here, we've got our 1 hour chart pulled up. I'm going to go full screen. We got 1 minute to go before GDP numbers, claims, and durable goods all drop on the market. We should expect a little bit of volatility if any of these numbers come out far from expectations. We'll be here to cover it. Please do yourself a favor. Do not leave. Do not walk away right as the news drops. A lot of people do that. They leave the stream. The news is the catalyst. The trading part happens after the news. That's the whole point. So we'll be there in just a second. But again, 30 seconds to go. Trying out the new layout. I hope you guys like this. I find it a lot easier to look at everything at once this way. And so again, we've got gold, stock indices top left, currencies bottom, and oil in the far bottom right. So there you go. We got about 15 seconds here. So let's go ahead and roll our breaking news. All right, we're coming in here. See the price action reaction, then we'll take a look at the numbers together. 5 seconds to go. All right. We're seeing a reaction on the euro dollar trading lower, pound dollar trading lower. Let me switch these over to auto so that they adjust with the screen here. S&P 500 flat slightly. NASDAQ slightly flat, Dow flat. Gold down slightly, euro down slightly, dollars up. U.S. oil, keep an eye on oil because, again, if that GDP number came out hot, you'd expect oil to probably pop on it. Hot GDP number, let's take a look. Number should be coming in. Okay, so we got 214 more people filed for unemployment than expected, although this advanced GDP number came out hot, interestingly. Advanced GDP price index quarter over quarter 1.5. Core durable goods came out hot. Durable goods came out I'm sorry, core came out hot. Durable goods came out at 0%. S&P 500 popped a little bit. NASDAQ popped just a little bit. Dow rallied slightly. Gold rallied slightly. Oil, not moving too much there. Kind of big wicks off the bottom here on the currency crosses. You've got the dollar index trading in both directions. It seems like we had a shoot lower and a shoot higher at the same time. Quite the moves there. S&P 500 again finding a little bit of a low here around 48.71. NASDAQ seems to be pushing up into the 17.5s, or holding the 17.5s rather. The Dow pushing a little bit here. And again, we had advanced GDP came out 3.3% compared to 2%. That is a huge number. Very interesting. Again, NASDAQ and S&P pushing off of the lows. You've got gold pushing off of the lows. 2018 an ounce right now. Let's switch views and take a closer look at gold for a second. So you might be wondering, next GDP numbers strong. Why isn't gold down? Because there's lots of numbers here to look through. Claims weaker than expected. That would be weak USD. Advanced GDP price index cooler than expected. Core durable goods hot. Durable goods cooler. So it's kind of a mixed bag, it seems. You do have a strong GDP print, which is a strong read, but definitely an interesting move here. We're seeing gold initially spike lower and now trail back up into this resistance here at 2020 an ounce. Should be interesting to see how price reacts here. You have past resistance here. I'm curious to see if this level rejects and if we do go lower from here. S&P 500 again rounding off the bottom there. NASDAQ, same story. Dow wicking off the bottom. Russell stocks rallied off of that. Here's a look at the dollar index, which popped initially, but then gave back its gains. Take a look at the hourly chart really quick. You can see what kind of happened there. You had a little bit of a run up, ramped into the news, and then faded here. Interesting to see that happening. And guys, we still have some very important stuff to come on this stream. We have ECB press conference. This is, of course, the European Central Bank setting their monetary policy, which is incredibly important to not just euro currency pairs, but to the world and to gold, especially. I've been sick for 10 years. I really have. I've heard a lot of people having the same experience. There's like this long drawn out cough, and I just have it for, I guess it hasn't been that long. I've been sick for a week and a half, 2 weeks. It's still a long time. VIX is trading off the lows. A little volatility coming in, but fading slightly here this morning. Gold 4-hour chart. Like I said, watch this area of resistance. This should be really interesting to see how this level reacts. If you do get rejection off this, again, you could very easily see this candle fill out that wick and test the lows. Again, that GDP print, I would say, was pretty strong. So I'm going to watch this close. Long COVID? No, I never had a fever. Just a pesky cold and cough. It's not been that bad other than just congestion. Just seasonal things, I suppose. Let's take a quick look at retail positioning, see what's going on here, where the crowd is positioned here today. Could be interesting. Let's get the latest that we can. Okay, so as that data loads in, we've got, look at this, retail traders, very long on the Australian dollar and Kiwi dollar. USD CHF still very long. And then you take a look at the indices, they're still very short. Interesting little sentiment from the room here when it comes to currencies. We could isolate this for just the majors. Here's all of your major currency pairs. If it would want to load. Maybe it doesn't want to load today. There it is. Okay, so Euro USD, Pound USD, Dollar CAD, these ones kind of neutral. Retail traders seem mixed. Dollar Yen, traders seem very much bearish on the yen. I'm sorry, bearish on the dollar against the yen, which could actually be a bullish contrarian signal. So keep that in mind. Definitely worth watching. Again, a quick check on the COT data. We get this once a week on Friday. So we'll get the latest data tomorrow, which should be very interesting. Reminder that the big one, the big buy of the previous reporting was the pound, which I thought was really interesting. They had a huge increase in bullish contracts traded on the pound in terms of institutional traders. So we'll continue to watch that one close to see how that data comes in tomorrow, which again, will be something we're checking out for sure. COT data lets us track institutional money flow, whether they're buying or selling certain assets like gold, currencies, indices, etc. You can view this data anytime you'd like if you do have a copy of the Edge Finder. And if you don't, get a trial. We've got a trial opportunity going on. Trials are back. And if you do not have a trial already set up, here's how you can do it. We've got a link here in the chat right there. Boom. Try out the Edge Finder. Click that link, fill out the application, and someone from our team will get you hooked up with a trial of our software so that you can check it out for 30 days. If you want 30 days access to our software to play around with it, see if it's a right fit for you. Transparently, our goal is to allow people to try out our software. If they're serious traders, if they're looking to add data and fundamentals to their market analysis, if you want to use this tool every single day, it is a game changer to have market data at your click of your mouse. If you would like a copy to try out for 30 days, click this link, fill out the application, and someone will reach out to you shortly to get you set up. Okay. Let's keep pushing with this reaction here. We've got gold pushing higher here. The S&P and the NASDAQ also pushing off their lows here. You've got the Russell pushing off their lows. Let's see what else we have. In terms of currencies, you've got the euro dollar just trading sideways here, it seems. A little bit of a push off the lows. Pound USD, same thing. These things seem to lack direction right now for me. Dollar yen, take a look at the daily chart. Perhaps we're starting to roll over a little bit here, though that could be short term before the dollar strength keeps kicking. I mean, this economic data that we're getting out of the U.S. is just hot over and over. I mean, this GDP number is still strong, and while claims were a little higher than expected, it's still reasonable, right? We're still seeing, it's not like the labor market is totally in the dumps or anything like that. It's actually really, really strong. And tie that with the GDP number that's strong. I mean, U.S. economic data still looks to be very, very strong. And so what does that leave us with? Well, it leaves me slightly more, inclined to be a dollar bull if I can get setups, right? If we go back and retest again this level here, take a look at the dollar with me, right? We saw this level break out at 102.5, 102.6. We saw this level break, retest very briefly, and find immediate buyers. So if we go back to that level, I think that level could see a similar reaction going forward as long as this economic data continues to roll in strong. So I'm watching the dollar. I think that could be an interesting play on a pullback here. Yep, definitely interesting. Gold, interestingly enough, I would not have expected, excuse me, guys. I would expect, and I could be wrong about this, but this is my opinion. I would expect this area to actually hold as resistance. I think that this level should continue to try and hold as resistance for gold. And the reason I say that is because that GDP number was hot. And yes, claims were a little bit cool, but that GDP number is really, really hot. So I actually would take that as more of a bearish signal at this level. We'll continue to watch that one to see if I'm correct in thinking so. But Let's take a quick look at yields. It's all about yields right now, guys. And I want to say something that is really, really important. The bond market leads, well, let me say this. The stock market and commodities, they look to the bond market first and foremost. You know why we keep talking about the Fed? It's because the Fed and what they do is largely the environment of the bond market. If yields are rising, what that tells you is that expectations for inflation are to remain high and for the Fed to be less likely to rate cut, right? So we've seen this rise in the 10-year yield and the 2-year yield. But what's so interesting about this is that rise is part of the reason why I shifted to be a little bit more dollar bullish. It does seem like economic data is suggesting that it's going to be hard to get those rate cuts as fast as people were thinking. A lot of people were thinking March. I was not thinking March. And I'm still not thinking March. That could be, and March is still kind of a hot debate, right? We still could see March rate cuts, but I don't personally think we do. Right now, I think the economic data that we're seeing is strong, and the Fed might say, hey, we don't need to rush into rate cuts. This economy is not seemingly slowing at where we're at. Why rate cut when we don't necessarily have to? And inflation is a risk still if the economy doesn't cool. So that's my kind of thought process, but we're watching yields here this morning. Very, very important stuff to watch that. And if you know, that is a very, very important topic when it comes to gold, dollar crosses, stocks, indices, all of that stuff. Very important to watch what's happening in the bond market. Oil, I'm still in my trade, looking good here this morning. Nice little pop here overall. There's the trade up $342. Signal was sent inside of our VIP group, and if you would like to join our VIP group, we're going to drop a link here real quick. We're doing a discount right now. If you shoot us a DM on our website, you can actually join our VIP and get access to all of the signals being sent. You can see Frank and I's trades. Ivan also drops his trades. Click this link right here. Send us a direct message using this link, and you can speak to someone right now, a real person, not a robot, a real person on our team about what memberships entail, the pricing options. We have a monthly, a yearly, and a one-time payment to join the VIP group. And if you'd like more information about that, the best way to find out is just to speak with us. Send us a direct message and ask about that right now. If you'd like to get signals sent directly to your phone or Discord, you can trade alongside me. And it's a great time to join because we've got a really interesting end of the week. Tomorrow we have core PCE, which in my opinion is the most important stat we're going to get all week. So today's numbers were really important, but tomorrow's are also. We have the ECB press conference starting in about 50 seconds, guys, which will be market moving. Watch the euro pairs. Again, euro, part of the reaction, I can't help but to think that part of the reason we didn't get follow through in either direction here today from this GDP number is perhaps because the ECB is right about to take the stand. And if they do say something that is very hawkish or dovish, it could greatly impact the euro. So yeah, could be interesting. Are we watching ECB? I'm not going to watch it, but I will look for headlines and try and keep you guys updated if I find anything. But yes, very, very interesting stuff. I want to take a look at the seasonality scanner real quick just to see what is on the horizon for February. We're a couple days away in terms of next month. So what we can do is if you have the Edge Finder, go to your new seasonality scanner tab. This is a really cool one that we've been working on. Takes the 10-year average of all your favorite currency pairs, assets, whatever you like to trade. And it tells you on a 10-year historical back test, how have each of these assets performed? So for example, this month, gold was expected to rise by 2.28%. Next month, it's expected to rise by 1.32%. And how is it getting that answer? It's getting that answer from history. It's studying the last 10 years, and it's saying, historically speaking, gold does this in the month of February. So next month, I'm going to be watching things like NAS. I'm going to be watching things like gold. I'm going to watch things like Bitcoin, which actually seasonally has a strong month, which I think is interesting. The VIX is expected to be hot next month, which is curious. And then on the flip side, we can look around and see what's negative. Oil is expected to be negative next month, so perhaps I bail on my trade at some point, take profits. So keep an eye on that one. Yen cross is expected to actually be negative next month. So a couple things to consider. You got pound yen, very, very notably, Swiss franc and yen crosses seem to be sold in the month of February. Really cool new seasonality scanner. We've been working on this one behind the scenes, and that one is up and running. I should mention, if you guys want a copy, if you'd like to try out the software, we do have a free trial version. I'm sorry, it is a trial version to get you, excuse me, guys, I'm still dying. Get you 30 days access to the Edge Finder. If you would like to try it out, click this link right here, fill out that application, and that way someone from our team can reach out to you with a trial so that you can check out our software and use it. Again, fill that form out. Let us know about what you're looking to get out of the Edge Finder. It does ask you just a couple questions about what your trading goals are, that sort of thing, and then you get that information. Quick look at the overall bullish bearish reading, and then in just a moment we're going to be joining Miko and Marco for some technical Thursday setups, taking a look at the markets. Quick look overall. Like I said, I'm still bullish in oil. We get that read here, which I think is pretty cool to see. Indices, you got NAS 100, S&P is no longer on the list. It's because the COT data came out pretty bearish for S&P. You got gold still bearish overall, which I think is really interesting. And I got a couple other charts here: Kiwi Swiss, Aussie dollar, Aussie Swiss, things like that. So that's generally speaking going to be where I am aligned for the time being. And quick look back at gold before we go. We're going to take a quick break here. Thank our sponsors, then we'll be back with Miko and Marco. So coming right after the break, we'll be taking a look at charts with those guys. So coming in right after this.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, and we're back with Miko and Marco. What's going on, guys?
Hello.
What is up? Hello.
Good to have you guys back for another exciting day today. We had GDP numbers, we had durable goods, we had a lot of market news causing a little bit of volatility here, and some pretty ugly wicks back and forth for some of the currency crosses, gold and other places. I guess we'll just jump into it. Marco, we'll go with you first. What are you watching here today? If you want to share your screen, we can take a look at what you got.
Sure. Let me just quickly share the screen.
Mm-hmm.
So I'm going to run through my 6 pairs. I'm going to do it quickly because most of them are flat and range bound. Euro US dollar in the general area flat. We've been having these liquidity grabs, for example, here as well. So loads of liquidity grabs. After seeing those and seeing how it has been ranging for a long time, I would expect a breakout to happen soon, maybe next week. So to the upside or downside. Currently not on the watch list. Euro Japanese yen, this one is actually overall forming a descending channel, after which I do expect the overall price to reverse to the upside. So I do expect something like this. That's what the probabilities are telling me. In that scenario that we do get bullish pressure, I will be looking to get in on some buys on that nice uptrend. So EJ is on the radar. So it's on the watch list. Aussie US dollar flat, same as EU. So flat in this general area, liquidity grabs all over the place. If you're a range-bound trader, I think this is a very enticing market for you. But for me as a trend trader, I'm leaving it alone. Aussie Japanese yen, again, descending, same as the Euro Japanese yen. So it is on the watch list because it's forming a high probability pattern right now. I do need to see that leg to the upside for me to be convinced that an uptrend is very likely to start. So I'm looking for the evidence of the uptrend, and I'm gauging momentum, of course. Pound US dollar, corrective, flat, especially in this general area. Volatile as well, same momentum going up, down, down, up, and then right here. Finally, New Zealand, Japanese yen, very corrective, very flat, volatile as well. Wicks all over the place. So I'm leaving this one alone as well. On the watch list is EJ and AJ. And again, so we only have tomorrow. Not sure we'll get something maybe next week. So maybe
Yeah.
wait for next week.
Fair enough, and also to the we have this conversation regularly because for those guys in the audience who are not as or maybe newer to the shows, Miko and Marco are very technical traders, and we talk about news candles often as either being like a confirmation or complete denial of price action, right? Because if you get something that is, you know, a really strong news candle, sometimes it can create direction, like something like this, or you know, these big follow through moves can be really interesting to watch out for. But when you get these wicks, these are hard to trade, whether you're technical or fundamental, because they again they are a bit confusing to find any sort of bearing. Mika, what do you think? What are you watching today? And I guess what's on your watch list?
Yeah, so not many on my watch list. Well, a lot of pairs need some work. There are quite a lot of choppy conditions throughout the market, especially with some of the dollar pairs. So I'm waiting for a bit more development from them. But some pairs do stand out. Some of the cross pairs, I really like pound CHF. We pull back into a really big level in the higher time frames. I'm looking to see if I can capitalize on the next swing back down, potentially the next lower high. Throughout the higher time frames, pound CHF has been in a pretty nice downtrend. And I'm looking to see if I can continue to look for shorts in these conditions. And we come back into a really nice level here. We've seen a reaction yesterday as well. So I'm basically waiting for some bearish structures to start printing some lower lows and lower highs. I like the move yesterday, but I need to see some follow through with that before I start looking to jump into any positions. And then I'll be looking for a break and retest somewhere to find some trades and look to hopefully swing it back down to these lows. I also like Euro Aussie and Euro NZD for some selling opportunities. Again, if I scale to the higher time frames, looking to see if I can try and capitalize on another swing high, one over there, second and a third. Looking to see if we can get a move to the downside in a very similar move for Euro NZD. I prefer Euro AUDs a little bit higher up. But again, I need to see some follow through of this bearish move. We're seeing a lot of momentum at the moment right now, but I'm looking to see if we can push through that and then possibly some pullback to retest that. And again, I can be looking for some entries on the retest, hopefully to capitalize on a swing back down to the lows. But across the board, there's a lot of choppy pairs. I've been eyeing up yen pairs for some selling opportunities, but they're being very maybe being bullish / corrective. Some have been bullish, some have been corrective. So I'm kind of waiting for them to develop maybe next week or the week after. But at the moment, pound CHF shorts and Euro Aussie USD look good to me.
Very cool. Very cool. Yeah. And again, with today's number, we saw pretty strong expectations for GDP in the US. And well, the reason I bring that up is because, you know, if you're a currency trader, which I know you guys primarily are, when you're looking at currencies, oftentimes it's those divergences in you know, economic data that really help to create, you know, lasting trends. We've talked about that in the past when, you know, one central bank is rate hiking and the other is not. It can cause these really strong, you know, fundamentally driven trends that technical traders can then jump in and find as well. I think it's interesting as we watch the currency world. We're seeing, you know, yesterday we saw PMI numbers out of Europe, which are still kind of slow, and they had hot numbers out of the US. So I do wonder, in terms of like the euro dollar, when you look at like the dollar strength that we're does that have the potential to continue in the technical side? So I guess of the US dollar strength that we're seeing, what do you guys think about like gold? What do you think about the euro? I know we touched on the euro briefly, but the euro against the dollar is an interesting one to me right now. So Marco, what do you think about euro dollar and or gold?
Sure. So looks like we currently have this 1 hour very large candle, I have to say. So that's on the euro Japanese yen. So euro US dollar currently for me, it's kind of flat in this area, a little bit volatile as well. Let me go to the 4 hour, check it out. Yeah, the 4 hour flat here as well. So I wouldn't touch this pair right now. I would maybe see it move away to the upside or to the downside, maybe follow the overall larger downtrend on this 4-hour chart. But currently, if I had to tell you a direction, I could not. I'm 50-50. And so let me touch on gold. On the 1 hour, flat as well. I mean, most of the dollar pairs in the past few days this week have looked like this on this 1 hour chart. So on the 1 hour looks flat. On the 4 hour, overall, this corrective downtrend, you could make a case for a descending, yeah, for sure, like a corrective descending channel. So I would expect more downside for gold possibly, but not a lot. I'm not seeing much momentum, especially on this 1 hour. Not seeing much momentum. And also what I wanted to ask, so of course this year is election year, and as we get closer and closer to the election day, what do you think is going to happen to the markets? So which ones will be impacted the most? And as news keeps coming out, you think it's going to have a major impact, or are you looking for the election day?
Yeah, that's a good question. I think seasonally, what we've seen historically for election years, interestingly, it's the pre-election year where you see big run-ups in the stock market, which would have been last year, which we saw. And then going into the actual year in terms of like the NASDAQ, the S&P, the historical trend seems to be that there's sort of a choppy first half, a mixed pops and drops on the first half, and then second half is typically pretty strong. If you, me, Miko, whoever, were trying to become the president, we would want to spend money. We'd want to make it look good. Doesn't matter your political affiliations. It simply is just what you would do if you were trying to get reelected. You'd want to make things look good. And so, that's why we talk about seasonality. It's such a key, important metric. There are repeatable patterns in history, and that's the whole idea of seasonality. And so I do think that markets will be impacted. The stock market will be an interesting place. That could be a interesting second half of the year. Gold will also be interesting if people get nervous about the elections. Sometimes gold can run higher on that, and it also it gets kind of into the nitty gritty about what political views or what kind of campaigns these candidates potentially could do, right? What are they going to like, for example, healthcare stocks in the US can be very impacted by what the president does or does not. So it will be really interesting to see, but I'll be watching, of course, the indices. The dollar could get strong for some time, but we'll have to watch that. The economic data out of the US has been really strong, but it's an interesting year for sure, just to continue to watch that. But I want to go to Miko with the same question. Gold right now, gold or silver, what do you see in there? Because for me, before you go, I just wanted to say this range that we were in, it broke out here on PMI data, and then now retested here today. But it seems like price is trying to hold this area. What do you think about gold overall, Miko? And do you have a strong bias anywhere?
So, yeah, with gold, I'm still kind of short bias with gold. I'm not really looking to trade it myself, as Marco briefly touched upon. There's not a lot of momentum with gold right now. It is quite corrected, but the kind of big driving force for me with gold is this big level here on the higher time frames, this kind of all-time high resistance, which the market keeps rejecting, and so far is rejecting still. So I still do have a short bias because I do think we can see some more downside off the back of this, especially with a big wick not too long ago. And on the 4H time frame, we are printing some lower highs as well. One over there, second, and potentially a third. And yeah, we have broken through the low of the range. So naturally, I would expect to see us make a move back down to the lows here. So a similar kind of idea to what you had charted up. But again, the risk to reward between that gap there has not really enticed me to anything. And I'm not really a big fan of how we've broken out with some nice momentum. But it looks like we've come back into a second consolidation, which is just choppiness and choppiness with gold. So quite frankly, I'm leaning to the bearish side of things, but it's just very corrective. So I'm not seeing much quality opportunities with gold right now.
Okay, fair enough. Also, I wanted to go back, Marco, to your thought for a second about election years. Another market that will be interesting to watch is the oil world, because you know, if you think about it from an election perspective, um, oil prices being down. I don't know if you guys, well, I'm sure you remember this. It was global, right? Several months ago, oil prices, you'd go to the gas pump and it was like a sticker shock. It was like, oh my gosh, this is a crazy, fee to fill up my car with gas. Well,
Yep.
that sentiment, I don't know if you also remember this, but people get really pissed off when that happens, right? They really get
Hmm.
mad at the administration. They blame them as if it is completely their fault. Is it their fault? Is it they're not their fault? That's up for debate. But the point
Hmm.
is,
Hmm.
people don't like when they have to pay a lot at the gas pumps. I am long oil. This is more of a short-term trade that I'm in. But I imagine that upside could be limited if going into an election year, they don't want that price to resurface. That they don't want at the debate table, at the debate podium, for the other candidates to be able to say, hey, well, look at gas prices. Americans are struggling, So that's
Yeah.
another, there's so much, markets get so politically, whether we like it or not. I would prefer them stay out of my backyard, the trading side, but
Uh-huh.
it doesn't matter what we want sometimes. You know what I mean?
Well, it's interesting. It's very interesting. I can't wait for the election to happen. Like last time I watched it and it was really volatile. My stop losses were looking very small, like 10 or 12 pips. And it was very interesting. So this one should be even more interesting with all the tensions around the election. So can't wait.
Yeah, absolutely. It will be it'll be an exciting year. And again, even
Mhm.
if you remember, I'm sure you guys do, when 2020 happened, it was like the markets were just so volatile. It was like these
Yep.
massive moves, and definitely will be interesting to continue to watch how that plays out. I want to thank both you guys for coming on the show. Great questions, great answers to what's going on, and also I do want to say to our audience. When we bring on guests to these shows, they are volunteering to come on. They are volunteering to add value to our show, and in return, I would ask that you guys make sure to go show them some love. Make sure to go subscribe to their YouTube channels. They've been linked for your convenience in the chat right now. So if you're watching with us live, click their channels. Make sure to go leave a comment on a video, go subscribe, go start following them. It's the least we can do for thanking them to come on to the show. Miko, Marco, thank you guys both for coming on, and we'll see you back next week.
Thank you.
Thank
See you
you.
next week.
See ya.
guys.
Bye.
All right. Yep. Always good to have those guys on again. Love the questions, love the conversations, and really good stuff. It should be an interesting year to continue to watch. That oil trade, like I said, it is still running. We'll continue to monitor this one pretty close. If we do see a run here on oil, my plan is to trim my trade in terms of not trim it, but to trail my stop, to trim my risk, if you will. If we do get a decisive close here today, I like the way this candle closed. I mean, that was a big a drop here, followed by buyers stepping back in. So really interesting to watch. I'm not sure if the Edge Finder would work for scalpers. Carl, it's actually a wonderful tool for all time frames, because the Edge Finder, I like to push back on this because, and I'm not picking on you specifically, but I often hear people say, "Oh, well, fundamentals aren't for me. I'm a day trader." Day trading, you can still have fundamentals that impact on the day, right? For example, if you trade the NFP event, I'm not talking about just looking for it to spike and then trading the spike. I'm talking about understanding what the event told us and trading the remainder of the day. It is absolutely relevant for fundamental traders to understand, I'm sorry, for day traders to understand the fundamental side of trading. It's really a powerful thing. And it's something that I think, if you guys understand this, this is something to consider. If you look at price patterns and trend lines and breakout patterns and smart money concepts and moving average and all that stuff, you are in the majority of the retail trading crowd. That is what retail traders do. They trade those sorts of technical based strategies. And I'm not saying that as oh, you shouldn't use them and they're all bad. That's not what I'm saying at all. What I'm saying is, if you understand that's the majority of what traders are using to trade, and most traders lose money. Okay, what do less traders use? Fundamentals. Very few traders use fundamentals. So if you embrace and start understanding macroeconomics and what is actually genuinely driving the markets, You have a superpower because most average amateur traders will never figure out fundamentals. It's too much work. It's a long learning curve. And I'm not going to lie, it's a difficult task to learn fundamentals. But if you do go the fundamental route, guess what? You have a superpower that most retail traders absolutely do not use, do not understand, and will never harness the utility of. If you would like to understand fundamentals, you're going to have to work hard at it. But it is, in my view, and many other professional traders, it's the way to go to understanding markets. So that's why we talk about them every single day, and it's a constant learning curve. I'm learning new things every day in fundamentals because the markets are so deep. To be honest, they're so much more complex than people think they are. Markets are wildly complex. Anyways, yes, we had some interesting moves here this morning. GDP numbers were hotter than expected, but claims came out cool. Advanced GDP price index. We can take a look at this. Annualized change in the price of all goods and services included in GDP. So we saw that number come out less than expected. It's the broadest measure of inflation, encompassing all activities included in GDP, and is a primary instrument that the central bank uses to assess inflation. So certainly a mixed bag in terms of reactions here today from the dollar, and we can go take a look at how the dollar index ended up. It is up slightly here on the day, up 0.12%, and continue to watch this one. I'm actually impressed that the dollar index, the price action here this week was messy for a lot of charts, but the dollar index was able to hold this low, came down and tested 102.8, rallied hard, and I'm curious to see how this continues to play out. But overall, looking at it as kind of a full picture view, it seems like, economic data just keeps rolling in hot for the US. Overall, they had some mixed stuff here today, but overall, the trend seems strong economic data is in. And that for the short term keeps me looking with a positive outlook on the dollar. From a technical perspective, 103.1 still seems to be holding. And it looks possible that we could go back to retest these areas at like 103.7. But yes, very, very interesting stuff to watch. In just a second, we're going to get the reaction from Frank. He'll be joining us on the show. I want to talk to him a little bit about what we saw here this morning in terms of economic data, and then also some of the price action that we're seeing. It's an interesting day, to say the least. We do have oil trying to break higher. I'm trying to hold on to this one. So maybe we'll take another real quick break, and then we'll come back with Frank to check out the markets here with me in just a second. So coming back with Frank right after this.
We have 4 brand new indicators built for TradingView, introducing the momentum, extension zones, trend projections, and volume spikes indicators. All 4 indicators work on every TradingView chart and time frame. You can easily see shifts in bullish or bearish momentum. Look and see if price is being overbought or oversold, which could cause a quick reversal. Automatically get a trend line that shows the true trend, bullish trend, and bearish trend based on the most recent market data. Get notified instantly of big spikes in volume to help you find breakouts. All 4 are available now at a1trading.com and can get set up in just a few minutes. Go check out our brand new line of TradingView indicators today.
All right, and we're back with Frank. What's going on, Frank?
Hey, how's it going?
Pretty good, man. So what did you make of what we saw from those numbers here this morning? We had GDP numbers, advanced GDP numbers. We had claims. What caught your eye out of it?
So I'm guessing just from a GDP standpoint that this is, pretty good for the dollar, but I would also say it would probably be good for the indices as well. Unemployment claims came in higher. I don't think that has too much of an impact I think GDP is the bigger issue here. But I am seeing gold here on the daily chart still reacting positively to this news, which is kind of a mixed bag, I guess. I'm not really sure why it would be going up on this news particularly, but what I am looking at now is a kind of a wedge pattern here. So there's going to be a breakout either way, and I might be trying to take a trade on the direction in which it goes. So I'm just going to probably sit and wait for gold before I look for an entry either to the long or short side. So yeah.
Okay. Fair enough. Yeah. And what do you think about oil? I think you took some profits on oil, right? Is that right?
I did. I've been in and out of oil. I didn't catch this last one today, but I've taken, I think, 3 trades and trailed out of in profit. So I'm kind of happy with that. Seeing that it's breaking out and coming up above like this sort of previous high is a good sign. Now I'm kind of looking at a retest up here in the 78s range. So may take another oil trade, but so far I'm in nothing right now.
Okay. Yeah, I was going to say that oil market move is makes sense to me the most. And of all the markets, I guess that GDP number coming out hot, I would think oil would move higher, and we're starting to see that. But yeah, the gold move, kind of interesting. I guess you could kind of say, well, claims, a little weaker than expected, and but really it's an interesting reaction. I would have expected gold to be pushing lower off of that. So, and it still might. There may just be a reaction that's delayed. We saw the initial spike on gold to the downside, and then kind of rebounding here now. So definitely an interesting market move here this morning. We got euro moving lower, pound dropped and then rallied. As you mentioned, the NASDAQ pushing higher here, S&P pushing higher here. And it still seems to be that overall, well, actually, this kind of makes sense for the indices, right? It's a strong economic read. At the same time, we saw jobs market data come in a little cool. So kind of a sweet spot, I guess, for jobs, but I'm sorry, for indices. But interesting moves overall today.
Yeah. And I would say jobs as well. Just seeing the fluctuations are going to happen, but higher unemployment claims, it's hard to tell right now, I guess, but I feel like there's an argument to both sides for indices. So if we see higher or lower, it still could be good because you want to see more employment in the market and you want to see good growth in labor, and it would be good for indices to see that. However, it all ties back into the inflation factor. So where is spending going to go? Like, are we going to increase in spending? We saw higher purchasing managers too. This could all run up sort of the inflation gauge, but standing alone on economic data, seeing higher claims or lower claims could be still a good sign for the economy. Just I think what really matters though is just watching out for CPI.
Yep, I agree. Should be an interesting rest of the week. We have that number tomorrow, as you mentioned. Core PCE will be coming out, and that will certainly be, in my opinion, the most important figure of the week, as that's the Fed's preferred inflation read. So we'll watch that one tomorrow live. Frank, thank you for joining me on the show, and we can go ahead and probably call it quits there for everyone here today. Last thing I will say before we end the show, remember, you guys can get a trial of the Edge Finder if you'd like to use the data that Frank and I are working on every single day. You can try it out for 30 days by clicking the link here in the chat. We've got it right there. Boom. Click this link, fill out that form, apply for an Edge Finder trial today, and someone from our team will reach out so that you can get access for 30 days. Use the COT data, retail positioning, help you to look through economic data, all sorts of good stuff. And with that said, Frank, thank you for joining me on the show, and we'll see you guys next time.
Sounds good. Thank you.
All right, thanks again for watching today's show. Our goal at A1 Trading is to continue to bring you free value through our daily videos and articles. keeping you up to date with the latest market coverage. If you like our content, make sure to subscribe for more. And hey, I'm going to need you to get out of here. We got some heavy equipment on its way, and you're kind of in the way, so you need to move along. Frankie, that hard hat needs to be on your head.